Welcome to the Northbound Wealth Podcast. All opinions expressed by Brent, his co-host, or his guests are solely his own opinions and do not reflect the opinions of Northbound Wealth Management LLC. This podcast is for informational and educational purposes only and is not intended as personalized recommendations or fiduciary advice. It is not intended to provide and should not be relied upon for any investment, accounting, legal, or tax advice, or as a solicitation to offer or to buy any securities. Clients of Northbound Wealth Management LLC may maintain positions in the securities discussed in this podcast.
Hello, everybody. Welcome to the first podcast of 2026. Today is January 7th, 2026. Happy New Year. Weekly market insights, forecasts, and Santa Claus rally holding pattern. Okay, so that's the news and the headline this week. Stocks trended lower last week amid signs of year-end profit taking and some sour investment sentiment over the Fed meeting minutes. The S&P 500 index shed 1% this past week as the market benchmark transitioned to 2026 following its third consecutive year of double-digit percentage gains. The S&P 500 ended at 6,858.47 on Friday, up 0.2% in its first trading session of the new year, but down from prior week's close. The index locked in a 16% gain for 2025 on Wednesday. Trading was closed on Thursday for New Year's Day. The index edged down 0.05% in December, but still added 2.3% in the fourth quarter, marking its third consecutive quarter of gains. The NASDAQ Composite Index lost 1.52%. The Dow Jones Industrial Average slid 0.67% last week, and the MSCI EFA Index, which tracks developed overseas stock markets, ticked up 0.31%. Sector highlights. The consumer discretionary sector had the largest percentage loss this week, falling 3.2%, followed by a 1.5% drop in technology and a 1.3% decline in financials. Consumer staples, communication services, real estate, healthcare, and materials also edged lower. Tesla was among the week's hardest hit stocks in consumer discretionary, falling 7.8%. The electric vehicle manufacturer's fourth quarter vehicle deliveries fell more than expected. In a note to its clients, Wedbush Securities attributed the performance to a challenging demand environment following the end of an electronic vehicle tax credit in the U.S. and headwinds in Europe. In the technology sector, AppLovin, or ticker symbol APP, had the largest weekly percentage drop, sliding 13%, followed by an 11% loss in shares of Palantir Technologies, ticker PLTR. The gain in energy stocks came as crude oil futures also rose on the week. Occidental Petroleum, or OXY, was among the best performers, up 6.4%. Berkshire Hathaway, ticker symbol BRK spot A or BRK spot B, both different share classes, A and B, said it completed its acquisition of OxyChem from Occidental for $9.7 billion. This week's U.S. economic data will include December automotive sales as well as the Institute for Supply Management's December Manufacturing Index on Monday. The Institute for Supply Management will also release its December Services Index Wednesday. Finally, the government's closely followed December employment report will be released on Friday, so we'll be tracking that for you. However, three sectors posted weekly gains. Energy climbed 3.3%, followed by a 0.9% increase in utilities and a 0.5% rise in industrials. I think the gain came on the heels of the Venezuelan transition by U.S. military occupying that country. That'll be interesting to see how that all plays out on the global oil supply chain scene. Okay, so 2026 forecasts, a grain of salt. Okay. When you see the word forecast, it should be closely followed by, quote, forecasts are based on assumptions and are subject to revisions over time. Financial, economic, political, and regulatory issues may cause the actual results to differ from the forecast, end quote. That was so true in 2025. After April 2nd, 2025, when Liberation Day tariffs were rolled out, many market gurus lowered their full-year forecast for the S&P 500, only to update their outlook again a few months later as stock prices roared back and went higher. So, a lesson learned: forecasts can be moving targets on Wall Street. the table shows that the street's best and brightest are what they're looking at in 2026 for the S&P. If you toss out the highest and lowest, you can see that the others settle into a pretty tight range for the year. So price targets for S&P 500, the 6 leading Wall Street firms issue their 2026 forecasts. Blink and you'll miss it. Firms are notorious for adjusting these outlooks, so take them with what I call a grain of salt. So let's start with Deutsche Bank. Their price target for the S&P is 8,000. And mind you, today, the market is trading around, I don't know, just shy of 7,000. Okay. Bank of America, their price target is 7,100. RBC, 7,750. JP Morgan, 7,500. Morgan Stanley, 7,800. Goldman Sachs, 7,600. The group average is 7,625. That's basically like 630 points above where we're trading at today. So that's interesting. But yet earnings growth for the S&P 500 is going to be around 15%. So we'll see. And valuations don't appear to be too overstretched. So we'll see how 2026 plays out, and I'll keep you updated here on the podcast as we go forward. So what the table doesn't show, and this is out on my blog on my website, www.northboundwealth.com. What it doesn't show is that there will be highs and lows during the year. So you could see the equity markets go up above those price targets, go below them, or stay below them. There will be times when stock prices look invincible, and there'll be other times when you wonder why you invest in stocks at all. So here's to a happy new year. All right. So Y charts is up next. I've got a diagram on the blog you guys can check out. Major index return summary. Looks like for the 1 year trailing number, and this is through just the very beginning of January for last year. So if you think about it, it's about a year's return. MSCI EFA index definitely outperformed the NASDAQ, the S&P, and the Dow over the past 12 months. That's the international markets did 31.91%. That index did. Dow Jones Industrial average 14.92% on the 1 year trailing number. S&P 500 17.88% on the 1 year trailing number. And the NASDAQ, 21.14%. So, great year, another green year. A lot of people that are invested in the equity markets are growing their assets and doing a good job. 10-year Treasury note review, 4.19% is what the 10-year Treasury is at. The Fed has cut some interest rates, but where a lot of people are worried and concerned or really focused on is the mortgage rates, actually. And the 10-year doesn't have much of an effect on the 30-year mortgage note. 30-year mortgage note, I think today is trading around 6.2 on a 30-year mortgage. So 6.2%. Hopefully, and by the way, I want to just make a comment. There's a floor right around 6%. So those of you who are looking to buy homes, you need to have proper expectations that most likely over the course of the next 12 months, 18 months, most likely interest rates are going to, for the 30-year mortgage, probably going to be around 6%, 6.5, somewhere in there. It would take a pretty good shock and a lot of Fed lowering to get that interest rate, that 30-year note rate around 5.5. So the Fed is expected to lower interest rates a couple of times this year. So we'll keep tracking that for you and reporting as we go. Yeah. Already covered some of the economic data that's being reported, and there are no major companies reporting earnings this week. That all gets kicked off with the big banks starting middle of January, so next week for Q4 reports. So we'll be tracking that for you. Record-keeping tips for small business owners is your tax tip of the week. As a small business owner, your record-keeping is of utmost importance. These records show your income, expenses, business transactions, and much more. You can choose any record-keeping system you prefer. If you and the IRS have the necessary information, as a business owner, you will need to keep track of your supporting documents such as purchases, sales, payroll, sales slips, paid bills, invoices, receipts, deposit slips, canceled checks, travel, transportation, entertainment, and gift expenses, and assets. Keeping your records well organized will save you time, effort, and money. This information is not a substitute for individualized tax advice. Please discuss your specific tax issues with a qualified tax professional. This tip was adapted from irs.gov. All right. Stay tuned for the next segment. We'll make it brief this week and we'll start again next week because this is a holiday short. All right. Stay tuned. Thanks. January is Financial Wellness Month. So a smarter January starts with reviewing your financial situation, looking over budgets, making projections as to maybe how the year is going to go. Most resolutions fade because they're vague. So January is Financial Wellness Month, and you don't obtain financial wellness with vague goals. You pursue it with measurable goals that are tied to real life outcomes you work towards for you and your family, your career, your vocation. Sometimes it can be overwhelming, though. That's when financial professionals can help. We work with clients to do the following and more. So identify a few short-term goals that can make a difference. For example, savings rates, debt pay down, or cash runway and months that you might need it. Track them weekly. Stress test your portfolio. What changes if X, Y, or Z happens? Run different scenarios so you can stress test your strategies for both the short and long term. Review your plan now. That is review deferrals, salary deferrals, that is. Evaluate retirement plans, come up with a strategy to manage gains and losses. So like maybe tax loss harvesting stuff. Update the quote people side of beneficiaries. So like beneficiary designations on your IRAs or 401ks, power of attorneys, health proxies, and key insurance coverages. If you like a financial wellness check-in, message us, send us an email, or send us a note through the website. We'll uncover data-driven ideas to tailor to your situation, help you with your financial wellness. So, again, as a review, identify a few short-term goals, stress test your portfolio, review your plan, and update the people side of things. That's a good barometer, good checkup for January. College versus retirement, where should your extra money go? Even when the ability to do both exists, the order does matter. Key considerations: consider retirement first. Compounding works best when funds are invested earlier, and as you know, there are no loans for retirement. Education has flexibility. Scholarships, grants, and student loans can fill gaps if needed. Timing matters. The mix between retirement and education funding can shift as your kids are near college age and or retirement approaches. Here's a pro tip. You may benefit from focusing on retirement needs first, then using surplus cash flow for education funding strategies. Of course, you need to revisit this periodically to stay aligned with the market conditions and your family goals, your unique situation. Smart preparation makes it possible to retire and support education in a way that fits your overall wealth strategy. If you have questions about this, we're here to help. The old college versus retirement, where should our extra money go conversation. All right, stay tuned for the next segment. All right, so here is a big deal in my world. It is the Indiana versus Oregon football matchup. It is crazy. I was born and raised in Oregon. I spent most of my life in Oregon, and I spent a big chunk of my life in Indiana so far, and it is a bifurcated Brent. So Indiana versus Oregon prediction, according to CBS Sports, the pick, the spreads, the odds: Hoosiers and the Ducks set for a rematch in the Peach Bowl of the CFP semifinal. This is a rematch of the Big Ten championship. The winner of Friday night's Big Ten rematch advances to the national championship game. So, according to CBS, number 1 Indiana faces number 5 Oregon. They've already faced each other this season, a 30-20 win in Eugene for the undefeated Hoosiers. It was a significant program accomplishment for Curt Cignetti in year 2 of his miraculous Indiana rebuild, especially after an offseason narrative around the Hoosiers' losses to Ohio State and Notre Dame lingered. Indiana definitively proved in that game and every game since that it was a no one-hit wonder. Now the big question is, can Indiana do it again? You can call it an overplayed narrative, but it can be difficult to beat a team twice in one season. Georgia just learned that the hard way down in New Orleans against Ole Miss. Indiana seems to be peaking at the right time, coming into this one off an emphatic 38-3 Rose Bowl win over Alabama, but Oregon is battle-tested too. The Ducks easily handled their first-round opponent, James Madison, before knocking off Texas Tech 23-0 in one of the most impressive defensive performances of the season, with Dan Lanning leading the way. His team isn't afraid of anything or anyone. How does Oregon run game hold up? So Oregon was dealt a significant blow Tuesday when running back Jordan Davison was officially ruled out for Friday's Peach Bowl. Davidson, who led the Ducks with 15 rushing touchdowns, suffered a broken clavicle in Oregon's quarterfinal win over Texas Tech. Making the situation even more precarious is that Oregon is now down to only 3 healthy running backs, with Jaden Limar and Makai Hughes hitting the transfer portal. Fortunately for Oregon, it still has Noah Whittington, who led the way with rushing attempts, but will be interesting to see how Oregon offensive coordinator Will Stein adjusts his game plan without a significant piece like Davidson. Whittington's carries high this season was 17 against Iowa and Washington, but that number will almost certainly have to go up against Indiana if Oregon wants to stay balanced. Preview tough NFL picks. So NFL mock drafts you can find on the internet, but Indiana's Fernando Mendoza and Oregon's Dante Moore are pretty consistently atop the projections. At CBS Sports, for instance, both Mike Renner and Josh Edwards both have Mendoza and Moore projected to go in the first 2 picks of the 2026 NFL draft. We're still a long way from April's draft, but if you're a fan of, say, the Las Vegas Raiders or New York Jets or Arizona Cardinals, you want to tune into the Peach Bowl to watch your potential next franchise quarterback. This is the kind of game that can play big in the minds of NFL executives and scouts when it comes time for draft. Mendoza, the Heisman Trophy winner, has flown up the draft boards with terrific season in Bloomington. He hasn't officially declared for the draft, but with the Hoosiers taking TCU quarterback transfer Josh Hoover, the signs are there. It's a bit more up in the air with Moore, which is the Oregon quarterback, who could still return to Eugene despite the possibility of being a top pick. One factor, too, Moore's just still 20 years old, and this is his first season as a full-time starter after previously starting 5 games as a freshman at UCLA. Huge stakes for both programs. Indiana's never been anywhere close to this stratosphere of college football before. A Peach Bowl win over Oregon to send Indiana to its first national title championship appearance would be remarkable. There will be books and movies made about Cignetti if he can get 2 more wins. Oregon has had much more success over the last 2 decades than Indiana, but still has never won a national championship. Like Nike co-founder Phil Knight desperately wants to see one, Oregon has played in 2 national championship games in the 21st century, a 22-19 loss to Auburn in 2011 and a 42-20 loss to Ohio State in 2015. The Ducks have been so close in the past, and another bite at the apple would be well appreciated in Eugene. So, when's the game? Friday, January 9th, 7:30 Eastern, Mercedes-Benz Stadium, Atlanta, Georgia. It's on ESPN, live stream on Fubo. So I'm really excited about it. I was born and raised in Oregon. I'm rooting for Oregon. I've always been a fan, and I'm going to pull that they're going to win it. Now, it's going to be hard fought, and if Indiana ends up pulling off the upset / not really upset, but victory over Oregon, because Oregon is the underdog, I will be elated as well. So to me, I have a win-win setup. Being from Oregon and, well, I'd say spending half my life in Indiana, great. I'm a winner either way. So pulling for both teams. I hope it's a tight game. I hope it comes down to the wire, and in that it's exciting. All right. Thank you for tuning into the Northbound Podcast. I know this is a little bit of a divergence, but I had to talk about it in 2026. Way to kick off the new year. Hey everybody, I just want to make some comments about the equity markets. We're sitting on the S&P right around 7,000, and things look pretty good for 2026. Overall generally remain bullish until I'm not. So I think that I think the markets are going to do well this year outside of a black swan event. I also think that when we get a pullback, at least at this stage of the game, that if we get a 10 to 15% correction, that's actually normal throughout the course of a calendar year based on not just what my opinions are, but JP Morgan research over the last 45 years. A guide to the market slide that dictates that very clearly, and the data to back all of it up. And so I follow their analytics on that one, and I use stock charts, white charts, look at MACDs. I look at all kinds of momentum indicators as well as fundamental analysis, and I'm feeling pretty confident about how things are going. I don't think the equity markets are overvalued to the degree which there's euphoria. I think the behavior has been over the course of the past year since Liberation Day, I guess, in April, when we had a kind of a flash crash, if you will, a shock, that I think that reviewing portfolios, reviewing risk tolerances, especially after the 3 years of equity markets doing really well, is very, very important as life goals and objectives can change as time goes on. It's been a really good run here, and I think it will continue with the AI boom backing it up. Now, we're going to be paying attention to the cap spend on the hyperscalers to try to figure it out, to see if they're going to have a return on investment that's going to be worth it. And I do believe that it will be. We're going to be tracking this as we go out throughout 2026, and we will take market returns as they've been. It's been really fun and enjoyable, and a challenge. The challenge is enjoyable, actually, in this space, to be managing money through it. We're going to be watching the Fed and seeing who's going to drive the Fed and policy from the Federal Reserve perspective when Jerome Powell is no longer in power and in play there. So we'll be seeing what they're going to be doing. And so I think 2026 is going to be filled with a lot of exciting opportunities throughout the economy. And I see the equity markets broadening out, not just concentration with the Mag 7, but broadening out to more of the other 493 stocks in the S&P 500, as well as mid-cap space, small-cap space, international for sure. I think that space is going to do pretty well also. So going to be paying attention to what's going on geopolitically also with Putin and Xi Jinping in China and some of these other countries, as well as taxes here, stateside taxes, the OBBBA, how that's going to play a big part of our economy and driving GDP. GDP is doing pretty good. So things are looking good overall. I'm going to be watching inflation as well. So taxes, inflation, geopolitics, valuations, fiscal and monetary policy, as well as technical analysis as far as how stocks are trading and how they're behaving, market structure as well. And so the deregulation space, AI boom, there's just a whole lot out there, and it's going to be a lot of fun. So stay tuned to the Northbound Wealth Podcast as we move through 2026. This is the 127th episode of it. I'm going to keep this going as long as I'm having fun. So hope you guys all continue to enjoy, and have a great week and weekend, and hopefully we'll get another one out to you next week. Take care.
Whether you're just getting started as an investor or you're managing a multi-million-dollar portfolio, Northbound Wealth Management has the solution for you. It all starts with building the right financial plan. To speak with a financial planner today, visit northboundwealth.com. Don't forget to check us out on youtube.com at Northbound Wealth. And make sure to leave a rating and review on your favorite podcasting app. Thank you for listening.